Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here, as a Chief Executive Officer of Treasury Consulting LLP. And today we are going to cover a video which is gold, the valuation of the gold, or we are going to cover the technical analysis of the gold in the last 1 year. As you very well understand that a lot of volatility has been happening in the financial markets, and in that regards, gold is turning out to be very important because it is one of the precious metals, and gold historically has been termed as a metal which can be used to hedge the volatility risk during the financial crisis. I'm not suggesting that gold. I'm not suggesting that gold is 100% risk free, or there is no, or you are able to hedge the complete. I would say any kind of swan, black swan, neon swan, and white swan, using by white swan using the gold. But at the same time, I would like to stress one fact very clearly, that gold is one of the great absolute instruments that we can use during the financial crisis, because of the fact that gold can be hoarded. You can hoard the gold for a longer period of the time, for a very big longer period of the time. You can hoard the gold. You can even hoard the gold for I would say 10 years, 20 years, 30 years. But one absolute problem currently we are facing is that gold has been losing its power. Gold is going again. Gold is going reverse of US dollar. So what I meant to say, that although that is a separate fact, that US dollar is continue to maintain its strength, and currently the dollar index has been trading absolutely at 97.51 sitting today, which is Friday, and gold is maintaining its valuation at 1251. You can very well see here on this chart that the gold is maintaining its valuation at 1253, in fact, sitting today right now. And if you carefully see, this is giving some false signals. I'm very much surprised that this is giving false signal, in the sense as follows. First, the chart which is right in front of you, this is a 1 year chart. So this is a 1 year chart. This is not a very deep long chart, right, which we are using. Secondly, this chart is based upon VWAP, volume weighted average price. So we are going to be calculating the weighted price, but based upon volume weighted average price. So which we are not calculating, I would say something, the spot price or the close price and the high price. If you look at this chart, you will get to know that this chart is maintaining a mean reverting position. Of course, gold is a currency which is known for the mean reverting positions by the time gold has been incorporated. Like if you look at here, when gold was at approximately 1050, it went here, it went to 1282, then it went up, I still remember, 1380, then it went up, went down, went up, went down, but the scale was very, very, very limited. Now this is 1250, approximately 1272, which it went, and now it is trading 1250. If we see that gold is maintaining a deep negative relationship with the dollar, and unfortunately gold should have fallen now, considering the fact that the dollar index is trading at 97.51. Gold should have fallen now. This is my personal opinion. The relationship is very simple, because if the dollar index over the last 2 years or 3 years is maintaining a consistent positioning over 96, 95, and gold is still continue to be trade about roughly 1215. So this seems to be an issue for me, because this is giving a superficial signal to me. I'm not very much convinced that gold can move to any. I'm not very much convinced that how gold is able to maintain its positioning at 1262. But in my personal opinion, it should have been fallen. But one thing which if you look at this chart, because I would like to check two things about the gold to you. I would show you two things to you, and this is the first time which we are doing. HV here stands for historical volatility, and we taken a period 10. So we have taken a 10 historical volatility period. Now what we did, In this, if you look at this historical volatility, now these all are the historical volatility of the gold. And if you carefully see that, I will pinpoint here, gold is maintaining an average volatility of 18% on a month-on-month basis. It effectively means that, and if you look at this chart, you can clearly see that when it comes to the valuation of the gold, like see here, the valuation which was approximately 1050, it went to approximately 1372, which is a difference of roughly $320 per ounce. Now it is 1250. If you see here, then the average volatility of the gold is approximately 17 to 18%. It means that if you are facing a volatility of 17 to 18%, then how you are not mean reverting in nature? That is the biggest doubt which I have right now. That if you maintaining a volatility of 17, then you should have been more mean reverting than what you are today. But nonetheless, second thing, we would like to compare this historical volatility superficial pattern using RVI, which is relative volatility index. And as I already told you, what it does compute the difference. It does compute the standard deviation of the difference between the two prices. Standard deviation of the difference in the two prices. So if we look carefully, then we will get to know that the standard, then if we get to know that this is extremely mean reverting in nature. And this, if we look, this suggests that currently gold is neither a buy and gold is neither a sell, which I absolutely agree that gold sitting at 1250 is absolutely not a sell point, absolutely not a buy point, because American elections are 30 days from now, roughly speaking 25 days from now, and there is I don't think that Trump will win. I think Hillary Clinton will win. On the other side, dollar is maintaining a very good strength of approximately 1200, and dollar strength is maintaining about 97, 98 of strength, right? And last but not the least, the competitors of the dollar, which is your so-called GBP, which is your euro, and which is Chinese yuan, all are facing the big mess. You tell me Chinese yuan foreign exchange reserves has been fallen from 4.5 trillion to now 3.2 trillion. So they have utilized almost 1.4 or 1.5 trillion dollar of FX reserve only to manage the currency position. And believe me, this is not a good sign. The reason is very simple, because 1 trillion is 1000 billion, and 1.5 trillion means 1500 billion. So this is not a good sign the way they are going on. But what we can do? So if we look this chart, then we will get to know that there is a conflicting signal in the gold, and conflicting signal suggests that gold can move in any direction. It can go way up here, so it might touch 1350 something, or it can go way down there, so it might touch I would say 1200 or maybe probably 1180 here. But I think that 1100 continue to be the great strength for gold, and I think GBP, the fall in the GBP would also determine the value of gold. But in my personal opinion, GBP has been trading at 1.22, and today is Friday, and I think as we forecasted that the next 3 or 4 trading sessions which would happen next week, Monday, Tuesday type, they would be very, very critical for GBP, because if GBP would touch to 1.19 and 1.18, I think gold would move up. This is my personal opinion. If GBP would go down, and I think gold would move up. So this is what we are forecasting, but there is a lot of probability that GBP would get down to 1.17 next week. And there are a lot of talks which are happening about the Brexit also. I'm not sure till what extent this would work or not, but at the same time, this would surely impact the valuation of the gold, to be very honest. Let us see how the things would go. So this was all about the video. We introduced you that how the gold is moving. In our personal opinion, gold is always a volatile currency, and it should be. But our personal opinion suggests that gold is maintaining a superficial position, because either it should be 1315 or either it should be I would say roughly 1150. but it is maintaining 1250. I'm not sure in which direction it would go, but certainly it would go and get a hit. So this was for the today's video. We Treasury Consulting already thank you for sparing your time. As you know that we already launched our website, which is Treasury Consulting at www.treasuryconsulting.in. So the first look of the website has already been launched. The another look is coming next week, which is a much better version of the current website, and we are planning to touch 250 videos by December. You can now, everything about us would be on our website www.treasuryconsulting.in. You're most welcome to reach to us anytime. Thank you, and have a great day ahead.